Morning, everybody. It is 8:10 a.m. January 8th. Welcome to my channel. Yesterday was a very, very interesting day. And your boy decided to not trust internals 100% yesterday. And I paid for it. I took yesterday one suboptimal short, which is not a smart short, early on. Well, not early on. Then I took a suboptimal long as well. I didn't wait for the deeper pullback, even though I had MFE, maximal favorable excursion, right off the bat. So I was up, but then I got stopped, and then it came to really where I want to enter. I entered again. I had, I don't know, up 2-3 points or something like that. It looked like it was gonna go in my favor, and it reversed on me, and I took another loss, and I was just like, well, I got taught a lesson there. Now, wasn't the biggest losing day I've ever had or anything like that. That was more on my eval account. That was probably my worst day in 7 or 8 weeks or something like that. That I really just made a couple of boneheads decisions. Even though the last two trades did get excursion, that doesn't matter, right? I really didn't. I kind of literally didn't wait for exact system. The last one, I would say, the last long was probably the long I wanted. However, however, what I have to say is, and we'll get into it, the market internals were never strong yesterday. And I know not to fight my internals. I know not to fight them. Now, the one thing that was in the favor of the markets were tech was one of the leaders yesterday. So that generally tends to lead to a nice move up, which we did get the move up, right? But the overall internals of the market were not really ever strong. And I'm saying this in my community, I'm saying, man, these internals are really not strong. And then the market fell apart. Okay. Now, what did get a little gift in my trading yesterday was my wife was at work and my daughter was home because she was sick the day before, so she had to stay home with me. So I really couldn't go anywhere. I generally would take a walk. So I was like, all right. I locked myself out of Top Step and I'm just watching the market. And I'm like, okay, this could be setting up for a short here. And because I saw the internals, I was like, just I'm not gonna fight the internals. And I'm like, all right, this is setting up for a short. And I was like, I generally wouldn't. I would be walking. I wouldn't be trading. And I was like, this is setting up pretty nicely. And I took a short. And I took a short pretty much kind of right next to like went past my target, and I just was like, all right, I'll take it. And that was my personal account, so I wound up making money yesterday. A very weird feeling to know that you didn't follow your process fully in my eval, which is obviously you don't. I'm not losing really money at all or anything like that. I'm just trying to get funded. But then you make real money, and I'm not gonna lie, it made me feel like wow, well, I made money that day. Still doesn't feel great. I don't like that I did that, but you know what? I was explaining to one of my good friends. I was like, you know what? And other traders probably can relate to this. I wouldn't say I wasn't saying that I was acting like, you know, my shit don't stink or something like that. I wasn't acting like that, like I was like conquering the trading world. But I was on a good run for about 6, 7, 8 weeks. Really, I think my worst day was $81, negative $81. And I'm starting to really feel like I'm getting in tune with the markets and saying to myself, this is what happened. I told my wife, hey, for some reason when I don't get good sleep, I don't know why I trade better. That should not make sense. But I was telling her, I've been trading really good. And every time you mention that and I say it out loud, I'm like, I just jinxed myself probably. I probably just jinxed myself. And there you go. Had my first kind of slip up day in a while. Even though I made real money in my personal account, I don't like that I did that. But at the same time, you got to give yourself grace. You got to give yourself forgiveness. I'm not a robot. I'm not gonna lie. It's still not hard to stomach that I did that. And again, I don't know if he's in here. One of my good friends, he saw my trade, the two trades, because he saw it go in my favor. So it looked like, hey, you just and I, they did go in my favor. They did do. They weren't the worst trades ever. I just knew the two trades before that should have been scrapped. Those were not good trades. That third one, I can't say that that was bad. That's kind of where I wanted to enter, and it did do what I wanted to. However, that's just eliminate those two losers, and then that trade, I would have only lost like $100, and I would have only had $100 losing day. That trade still was okay. It wasn't the worst trade, but I still didn't wait for my entry criteria. It just wasn't. That's where the mental capital, and I actually talked about it yesterday, right? I actually talked about it yesterday. So it's just trading is only people who understand it, who people who do it, right? And I'm kind of like sometimes perfectionists are too hard on my. I used to be very hard on myself. Like I used to be like, oh my god, I can't get this out of my head that I did that. I can't. Oh, man, I hate that I did it. At the end of the day, I know that I had a good long streak of good trading, and you're going to do this. It's inevitable. You're going to do something that you're not supposed to do, and at the end of the day, I got to give myself some grace. Uh, and today's a new day. I actually righted the ship a little bit by following my system by getting that short in my personal account. Now, what would have been great is I did see the market possibly falling apart after my short. Where my target was, I said, if it stays here, this could really drop. And I was actually taking my walk. And I reached out to one of my good friends and I said, this is very bearish what the market's going to do. And then it just dropped. And that I could have been at break even with my trade. That trade never would have even came close to my entry, and I would have rode that for many points, many points. But that's okay. I got my little real money, so that was my consolation. Just wanted to share that with you. That just trading is always a wild ride. It's an emotional roller coaster. Like I said, I didn't obsess about that. Every now and then during the day after trading, I'd be like, man, wish I didn't do that. And you're not doing it. Now, I didn't go on tilt or something like that. Probably my version of tilt right now, but I just don't like when you do that. It never feels good. So that's my little story I'm sharing with you guys this morning, right? Just being transparent. I was up to like in my eval account for Top Step up to 20, I think I was up to $2,500. So you need $500 more to be funded, and that went back down to like I think I'm back to like right under 2K, which I know in a trade or two I can go right back up, but like still, you know, that's just the way it is. I didn't go heavy, raise my size when I lost. Like that would have been horrible. I stepped to my risk rules, but actually I didn't. On one of the trades, I actually took a bigger loss, and I never do that. I moved my stop from like 4 or 3.5, I think, to 5 points. Not good. That was not smart either. So all of that was just not good, right? But you still have to be confident. I'm still confident, right? I'm still confident. This doesn't shake my confidence. I just got to follow my process. That's really it. You follow your process, I have an edge. It plays over time, over and over again. My edge yesterday was my internals. I literally, you can't fight them. I'm telling you right now, you just can't fight them, right? So let's get into it. Welcome to my channel. My name is Steven Gonzalez. I use market profile and buying profile to find structure in the markets along with supply and demand, gamma exposed levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. All right, that's how I find structure in the markets. Also use Anchor VWAS, market internals. Okay, market internals. That is my bread and butter. And I say that every morning to you guys. And yesterday, I wouldn't say I went against them fully. Okay, I wouldn't say that. And I'll get into a little bit of what I saw yesterday. A little bit. All right, now, as you know, I caught the smart money ICT concepts bug over the last month and a half. I've been back testing it, and now every day, that is why I'm going to get into a trade. Okay, I still read the market with internals. I still read the market with my supply and demand, gamma level, all that. But the way I'm going to get in a trade is via the ICT concepts or smart money concepts ICT. Okay, so if you're with me live, you're going to see me with fair value gaps. Um, it's just an additional tool. Okay, that's all it is. But it's a framework which I love, right? Because with Bookmap and footprint chart like that, like if you look at that, it's a lot of noise. There's a lot going on. Don't get me wrong, they still are handy. They still are. They still are. But for me, right now, a framework of candlesticks in a 1 minute chart for my execution is a lot more easier on the brain than looking at, delta and all the liquidity and stuff like that. And don't get me wrong, it doesn't overwhelm me. It's just I don't want to think. You have to make so much discretion with that, and it's not always easy to just sit there. That's why a lot of it's noise to me. And there is times where, oh, that's a big edge in using those tools. All right. Now, hopefully, you come join me every morning. Give you the market story, give you the market news, economic calendar, leaders and laggards, followed by a bunch of technical analysis. And then I give you the long and short trade scenarios in NASDAQ and ES futures. Okay? Now, if you want more in-depth coverage, you're going to go join my Discord. That's Confluence Trading. Go to the YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Okay? So now, if you join me live, right, I am still commenting. Like, I'm never like, oh, I'm ignoring internals. Like, don't. The whole time yesterday, I was saying in my room, I was like, these internals are not strong, but tech is strong. So that's what makes it tricky, right? And that's almost, in a way, could tell me hands off because it doesn't. It has a potential to flip, and it did, right? The day before that, internals were super bullish. Hence why I had that nice long, and the market ripped up to highs. Different story. Yesterday was a more mixed bag. Okay? And we had a liquidation break yesterday. If anybody was trading, there was a big sell out of nowhere. And it was because China and the Nvidia thing were like, they're not going to buy their chips or something like that. Boom. That was a liquidation break. The liquidation break removes sellers from the market and strengthens the market. That's exactly what it did. That's exactly what it did. And then we push higher. But we were pushing higher on not strong internals. Right? And then we come up, we almost make a double top in a little bit of a 15-minute candle. You make equal highs. That is why I was looking to go long. That's generally a buy side liquidity that gets like a magnet, but it didn't hit it yesterday. You notice in a 15-minute chart, there's an equal high in the QQQ and the SPY. Okay, the QQQ and the ES. I mean the Nasdaq and the ES. You'll notice that it's there. Okay, so that generally gets hit. That's why I was a little. I thought we were going to all-time highs yesterday. But the internals didn't support that. I even talked about the Valdi, and I'll get into that in a second, okay? All right. Let's get into futures watch list here. VIX is up 2%. The VIX is creeping. It was 14, and now it's going towards 16. Now remember, we have unemployment and non-farm payrolls tomorrow. Michigan consumer sentiment. Crude's getting love today, up 1.55%. 10-year yield's going up. That's not going to help mortgage rates. The dollar is flat. ES is down 0.10. See, the ES now has come up. We were gapping down. We still are. Okay? And this market's tricky right now. It really is. Okay? Nasdaq's down 0.15. 30-year bonds being sold. All right, that makes sense where yields are higher. All right, Russell's down 0.33. Dow's down 0.35. Gold down 0.43. Bitcoin down 1. Now Bitcoin went up to I think 94. Very interesting what we do here. Okay, Ethereum down 1.40. Silver down 3.5%, 3.5%, down to about almost 74.90 for an ounce of silver. Glad I trimmed the other day. Right? Remember, margins are getting higher. Okay, on those, expecting a violent pullback, but I don't know. All I know is I'm trimming when this thing flies high. And I think I'm close to having a zero cost basis. The profits that I've taken from it, I pretty much covered the cost to buy it. So that's a good feeling. All right, let's move on. 97 plus here. We got some leaders here. GE is up 1.66%. Now it did hit the weekly expected move to the upside, which was about 332.96 the other day. So I don't see it going too much over there. Now also Google or Alphabet is up 1.48%. Now what I just saw, I think Google just took the market cap and beat Apple since I think the first time since 2019. I own Google, and I'm probably looking to trim. All right, that weekly expected move in Google is 328.38. We're coming close to that. We're coming close to that. Okay. Boeing's up 1.37. Amazon's on 0.84. Now, Amazon's also broke its weekly expected move to the upside, and that was 236. We're at 243. So when that happens and goes past it that much, it could start cooking even more. When you break that expected move to the upside and start smoking it, now it's a problem, and it could run. Okay, Coinbase up 0.44. Nvidia's up 0.39. Who's lagging here? Meta is down 0.37. Netflix down 0.37. Microsoft down 0.64. Tesla's down 0.71. The lagger today is Apple. All right, now Apple is below its weekly expected move to the downside. The downside of the expected move for Friday is 260.275. It is really below that. So again, it's breaking through that. Now, I've seen it where it rips up on a Friday or something. But like I said, that's the laggard. All right, let's move on. Top sectors, Palantir, kind of defense tech here, up 2.82%, followed by Costco. Costco is up 1.24. Chevron up 0.64. Laggards here, Goldman Sachs down 0.32. Walmart down 0.51. And the mining, MEM, down almost 2%. Makes sense. Now, granular. That's not granular. This is granular. Who we got here? Lockheed Martin, defense, right? Up 7.47%. Oscar Health up 6.13. Raytheon, another defensive stock, up 3.14. Constellation Brands up 1.79. All right, now who's lagging today? I think that's Alcoa, aluminum, down 3.65. Gold Junior Miners down 1.55. Intuit down 1.33. UPS down 1.19. All right. Let's move on. Sectors. We got industrials up 0.81. That's your GE. Okay. That's your GE. That's your, believe it or not, Uber. Energy's up 0.47. Who's lagging today? Really, financials, nothing really too serious. Real estate's down 0.2. That doesn't move markets anyway. All right. Let's go over to our economic calendar for today. We do have jobless. They haven't really moved markets. To be honest with you, they just really haven't. I don't remember the last time initial jobless claims have moved markets. They really don't. They already came out too. I mean, maybe, let's see here. We expect it to 10. We got to, I mean, pretty much in line a little bit. All right. Big thing is tomorrow, non-farm payrolls, unemployment. All right, let's look at the juice today. What's this Trump on? I got a name. Fed Mirren is speaking now. Let's see here. Fed Mirren speaks at 10 a.m. Trump attends photo shoot. I hope that means he's not talking at 10:15. All right, at 10:15. Now, let's see here. Now, the defense stocks are because Trump signaled plans to increase military spending. That's why Raytheon Lockheed Martin is getting love. Palantir. Now, stock news. Alphabet stock rose 0.8 with the Google parent in demand a day after its market capitalization rose above Apple's for the first time since 2019, which I just said to you. Nvidia stock rose 0.4 after Bloomberg reported that China is preparing to approve some purchases of its H200 artificial intelligence chips. Raytheon, Lockheed Martin, Northrop Grumman all rose as investors bought into these defense stocks on the suggestion of a hefty rise in the 2027 U.S. military budget. Applied Digital stock gained 6.1 after the data center operator reported second quarter revenue above expectations. Constellation Brands stock gained 2% after the drinks company reported third quarter sales and profit above expectations, driven by steady demand for its Modelo Especial and Corona beer brands. Alcoa, that's the aluminum stock I talked about, stock fell 3.4 after JP Morgan downgraded its stance on the aluminum manufacturer. Gap stock rose 3.9 after UBS upgraded the clothing retailer to a buy. Okay, now moving on to some more news here. Importers brace for a 150 billion tariff refund fight if Trump loses at Supreme Court. Okay, Nvidia requires full upfront payment for H200 chips in China. Let's see here. We already talked about that. Let's see how Asia did. All right. Let's see. European shares extended losses, but defense stocks jumped to record high as geopolitical tensions from Venezuela to Greenland kept traders guessing. In Asia, Japan's Nikkei tumbled for a second straight day. So far, that's Japan tumbled, dragged lower by profit taken in the artificial intelligence sector. And Chinese stocks fell as investors booked profits in financial shares. Okay, so Asia giving some weakness there. All right, let's see. Apple, a law used to calculate fines on the basis of company global turnover, will discourage breaches by multinationals. All right, let's see. I'm just looking for something. All right, I think we're good here. Let's look if there's any notable upgrades here that we didn't talk about. Airbnb upgrade, Coinbase upgrade, Caesars Entertainment upgrade, Ford Motor upgrade, Alphabet, Google both got upgrades. So that's why Google's moving pretty nicely too. All right, Merck upgrade, Progressive Insurance upgrade, Shopify upgrade, Snowflake upgrade. Okay. Let's see if there's downgrades here. All right, let's see here. Let's see these downgrades today. Nike downgrade. Yeah, nothing else really there that really moves markets or any importance. Okay, move on. Move on. We're gonna look at those internals now. Show you exactly what I saw and didn't honor thy internals. All right, which I always should do, which I usually do. All right, but then there's times where that little guy on your shoulder, right, is like, internals are not strong. Maybe a long is not the best thing to do here. Okay, so here's our internals. Now, these bars are everything you need to know. It's how our markets move. Notice, okay, I want you to notice something. We started out weak. This is the recovery, and that is not strong, folks. A plus 54, but the divergence in equal weight, right? And this is always the name of the game. Does equal weight bring market cap lower, or does market cap bring equal weight higher? Well, guess what happened? Market cap went lower and lower and lower. Okay, so equal weight was deteriorating all day. And I'm seeing this. And where did I go long? I think up in here. Okay. This was the liquidation break. That candle right there. That engulfing candle that swept that liquidity. I almost got long here, which that would have been a nice long. That would have been the long. Okay. However, that's just what happened. Okay. Remember, look at these Valdez. I talk about these, and I said this specifically when I was live yesterday. At the point that this NYSE was negative, it was down. It was negative like a 1.7. I don't think it was 2 yet. And I said, oh, when you have a negative NYSE, a positive, not even 2-to-1 buying in Nasdaq exchange, I said we're not going to make a big outsized move today. And again, see, this is me talking out loud, and I'm going for the high a day or all-time highs. It didn't make sense. It really didn't make sense. Even the profile really didn't have volume at the top. It was thin. So as I'm saying this, I knew that. And I said to myself inside, I'm like, that profile is kind of thin at the top. It really didn't build volume there. The internals are not weak. But I said, tech is strong. Like I said, it wasn't the dumbest trade. It wasn't. It was not. So, but it wasn't optimal. That's what you want to be in trading. You want to be optimal. I had doubts. It wasn't like, yo, this is it right here. It wasn't. So that's internals. All right, that's internals. So let's move on to daily charts. We're going to move on to daily charts now. Okay, so we made new all-time highs. Okay, we didn't quite hit the expected move to the upside, right? Did that green bar. We didn't do that. What we did, though, is we made new monthly levels, right? That's last month's highs. We went above it, but see where we closed? Right at last week's highs. Now, does this daily candle become a swing high? I don't know. Okay, it could. Maybe this is the top. I don't know. Okay, it's messy. I said it yesterday. This market's messy. All right, you had a day, the prior day, where you did have overall strength in the market, even though some of the big ones were not that strong, but the overall internals were strong. Okay, yesterday was not the case. I don't know what today brings, right? So let's see, 689. That's where we are. We're here, folks. You're gapping down. We're below yesterday's lows. So the expectation for a daily bias would be we at least go to the prior day's lows, which would be around 687, 79s. Based on just this, we swept, right, the prior day's liquidity, made all-time highs. Nice wick, closed at the lows, which is bearish, and now we're gapping down. Expectation would be we tag the low of this day. Does that mean it happens? No. But generally, look, if you look at it this way, let's say you got long here or long here, and you had a run up, made all-time highs. We closed at the highs, right? That's bullish. So the expectation would be we take out the prior day's highs, which we did, but now we put a nice wick in. That's a liquidity raid. That's a sweep of the liquidity. That signifies some profit taking. So if I was long from anywhere here, I got out yesterday. That is a bearish day. Okay? Now, looking at futures. Let's look at futures now. Okay? In futures, we did not make an all-time high. All right, so futures, remember, these are like 24-hour candles. So right in futures, right, this day has to finish, but this is looking like a swing high, right? So look, we took out the prior session. Boom. Closed in the mid of the whole session. Now look, you opened here, drove all the way down here. You didn't take this low out. So expectation. Let me just say goodbye to my daughter. Love you. All right. Now, you are getting a little bit of a hammer here. Looks like a Thor hammer. But we're gapping down, right? So I don't know what's going to happen, right? But I would say this would be quite the move if you just rip up. I don't know. Maybe some news comes out. I have no clue. Okay. Now, obviously, it'd be more bearish if we were here. All right. So I don't know. We'll see. We'll see. All right. This should be interesting today. I think it's a mess. All right. Just look to the left. Look at all this trading that's happened here. It's a mess. Qs. Let's do it. All right, let's see those Qs. That Q, I thought, whoa, you're breaking out of that wedge. Nope. Close right back inside the wedge. Didn't quite go to last month's highs. Didn't quite go to the expected move to the upside. Can it still? Maybe, sure. Right? Where's this market now? 623.44. Right here. So the Qs are not gapping down. They're at the lows of yesterday. That's an inverse hammer. Right? Can this be a swing high? Right? I think the expectation would be you close here, right? Maybe we revisit that low. I don't know. Okay? I really don't. Look what we did. We closed right at last week's highs. So both markets did that. All right? Let's look at futures together. Now, in the, I'll get to it in the next chart, hourly chart. Okay? We are very close. This is a mess. Mess. Okay? This is look how much trading has just gone on in this area. We are compressing, right? Thought you broke out of that wedge. You didn't. Look at that yesterday's candle for the Nasdaq, because Nasdaq was relatively strong yesterday. Okay, so look at that doji, and now we're prices right below the doji. So the Nasdaq is a little more like, it's not as bearish. Okay, I don't know. Okay, you hit last week's highs. We couldn't close above them. I don't know. Look, you hit the 50-day moving average in the overnights. So, like I said, not an easy market. It just is not an easy market. Okay, let's look at that breadth. Let's check out the market's breadth. Is it stinky? Let's see. Oh, so yesterday, remember that equal weight was weaker yesterday, right? So we got weaker breadth. That breadth stinks a little more now. All right, we're back down to 60% of stocks in the S&P 500 are over their 50-day moving average. So that was quite a fall. Okay, so that's your breadth update. Now we're gonna go to the hourly charts here. So give me a sec here while I pull those up. And I did a little trend, little drawing here, and we'll bring that over here. So I'll just show you what the trend is here. Okay, let me bring you over to the hourly chart. So that's our trend. All right. So you can see here we had a market structure shift happen. Okay. Oh, really? You're really gonna have to restart this. Give me 1 second, folks. Why do I always can't see this? Unbelievable. All right. So once this marker comes alive, here we go. Okay. So this was our latest trend. Okay. Up, made a higher low, higher high, higher low, higher high. But guess what? You broke that swing low. That's the market structure shift for the near term trend. Okay. Then pushed up, made a lower low, and now, well, I drew this morning, but we'll look at this. Okay. So that's our trend change. It's just easier to see it in this regard. Okay, without candles. So we'll delete that and just go on what's going on in this market. Okay, so let's zoom in here. Very notable liquidity just got swept. Okay, so that would be bearish for right now. Okay, we have a new trend, right? Starting. This could be a new downtrend starting. Now, a couple important parts here to note. Okay, this is your most traded price of the month, 69.53. Every time the market does not know what it's going to do, it will go back to home. I call this nice warm snuggly bed. All right, in Jersey here on the East Coast, it's been cold. Actually, yesterday was the first day that wasn't, and today's not supposed to be that cold. But anyway, it always feels good to get in that warm snuggly bed, and that's what the market tends to do. It tends to go to the mean when the market doesn't know what it wants. Okay? So that's where we're at right now. No surprise to me. If you don't have the most traded price of the month on your chart, you won't know that, but I know it. Okay? Now, we know we had a market structure shift here by breaking that swing low. All right? So, what do we need to look at now? Well, we're back at the most traded price of the month. Here was the most traded price of the week. Notice, I was talking to my friend yesterday, telling him what happened when I was walking. Look what happened. We came up here. We're still in supply at this time. All-time highs is here. And then we took back out the most traded price of the week, which were going to be longs. Once we cleared that, closed down below, you took all those longs. Probably these longs from here, some from here, and they had to cover. Hence, you broke this swing low and made a market structure shift in trend. Okay? Now, so we came from the most traded price of the week and fell down to the most traded price of the month. We are making a new downtrend. Okay? You have some inverse, bearish fair value gaps. Those are the purple. You have some supply zones here. Okay? And these rays here, these lines that go out, are swing highs. Those are swing highs. Those are liquidity. Those are buy-side liquidity levels. Okay? And the white lines below are sell-side liquidity. Market goes to liquidity. Now, what just happened? Market pushed down right here, broke this equal low, couldn't displace lower. So you basically had a little sweep of liquidity there. Then the market pushed where? Right here to this buy-side liquidity, this swing high. Okay, also came into the bearish fair value gap. Let me make this a little clearer here. I know it's not the easiest thing to see. Sometimes these outlines, I don't have them at 100%. I'm going to make this one 100. Okay, there you can see a little better. So even though you broke the supply, you went into the bearish fair value gap, find sellers. And the most important part of what I'm showing you is, look, it swept that liquidity. Now we got to wait for the close, okay? But right now it's not displacing through. It's not giving a full-bodied candle and breaking that liquidity. The trend is holding. So what does that mean? Maybe these longs now are the liquidity has been swept, and we can make lower move to where? This swing low. Okay? That liquidity level, this swing low. And then we continue the downtrend. I don't know. Okay? I don't know. We're at the most traded price of the month, so there's going to be a decision made in this area. Okay? We do have a bullish fair value gap right here, this yellow box, down below us. Right? Maybe you can see a head and shoulders pattern forming a little bit. I'm saying this market's tricky. Now, here's another level. This is the month-to-date anchored VWAP. Notice it's flattening out. That makes sense, right? That's just telling me the market's indecisive. Okay? Flattened out anchored VWAP. Here's the week-to-date anchored VWAP. Here's the month-to-date anchored VWAP. Okay? What are we doing right now? We are accumulating. Anybody knows ICT, Power of 3, AMD, accumulation, manipulation, distribution. So could this be the manipulation leg? manipulated higher, then we're going to distribute lower. I don't know. Okay? That's the ES. Let's look at the trend in the NASDAQ 100, NASDAQ futures. All right, let's go here and we'll just look at this little, I like to do the schematic of the trend. So this was our trend in your NASDAQ, right? Swing high, swing low, swing high, swing low, boom, right? And then what did we do? Tried to make a little attempt and broke this swing low. That's a market structure shift, okay? Made a lower low, right? Lower high. Now, this was drawn this morning, so that's the trend change in the near term. Okay, obviously markets in the big macro are basically always in an uptrend, but you're going by the near term, right? So that's that. Now let's go over to the real deal. Okay, it's showing us the same thing. Okay, now very interesting. Let's look at these cues together. Let me show you this. What happened? So if we go into a 4-hour, okay, I want to show you something here. This swing high, I was mentioning it too. This is also last week's highs, right? Right here. This was 25935. I talked about it ad nauseum in my room yesterday. All right. Now look what happened. We broke it, right? Almost came up to this other supply zone. Okay. But guess what we did? We closed there, which was like, okay, it closed there. The next candle went ripped right back under this liquidity level, right back inside last week's highs in last week's range. This is the 2-month VPOC. This is the last month. This is the most traded price over the last 2 months. That's your 25876s, right? We went back under them. That was a big, strong move to go through that, but then you failed and came back through. So there's a lot of trading in the NASDAQ in this area. It's a lot. Heavy trading. This level down here around the 256 is your most traded price of the last rolling year. This is your most traded price of this the last rolling month, 257s. Okay? There's just so much volume. That's going to cause hesitancy, balance in the NASDAQ. Okay? That's what that's going to cause. All right? So we zoom in, and what do we see here? Let's go back to an hourly. Okay, so now we're back in hourly. We have a structure shift, market structure shift in trend. Now, we have our yesterday's highs as buy side liquidity, equal highs here. Now, right here, there's a bearish for value gap. That's that purple box. Okay, this dipped its toe in this supply, and look, this liquidity, this swing high, is getting swept. Could this be manipulation link? I don't know. This is accumulation. Okay. Now, if it displaces through and closes up here, well, it's going to test this liquidity. But is this a sweep of liquidity? So far, it looks like it. Okay. This bearish fair value gap and supply did its job. Now, if that is the manipulation link, you are going to distribute. You're going to distribute lower to where? To this swing low right there and 257. So under 257 is bearish for the NASDAQ. Okay, so if we do this right now, where this is our trend, we came up here, came down, made a swing high, made a swing low. This could be another swing high that's going to be made. Then what do? We take out this swing low and this swing low. Maybe we do something like this. And this is going to be a big level. It's the most traded price of the rolling year. Like I said, it's around the 256, 255s in between there. You can see the sheer volume here. But if we take that out, oh boy. Okay. Now, this is where we're at. All right. That is, to me, looking like people who are long up here are taking profits. And this could be another swing high to do this. Right. So keep that in mind. And that is your hourly charts. All right. I believe they're a lot clearer with some of these liquidity levels. I believe for anybody who's watching me, I believe that analysis is an upgrade to how I used to show those. I still believe, and obviously I talk about the most traded prices, but I believe that that's an upgrade. Maybe not. Maybe you could tell me. That would be much appreciated if you could. All right, now we're going to move on to the market profile, volume profile. That's my analysis I do. Still love it. Okay, let's get to that. And this is your market profile, volume profile. All right, so this is your ES. All right, let's look at this together. Now, we have levels here. We have levels. We are gapping down. Right there. Here's our gap fill. Happens to be a poor low, a double bottom, all right, equal low of 30-minute TPOs at the lows. Right there. That is your gap fill. Now we know we got the most traded price of the month. This box becomes very important, just like 257 in the NASDAQ. All right, 69.53 is our most traded price of the month. It's a little bit of a barometer. Above it, you could have a little bit of a bullish bias. Below it, you could have a little bit of a bearish bias. It's telling us right now we don't know what we want. This is the fairest price over the last month. So everybody says this is the fairest price to do business right now. Okay? Now, what is a big key level here? Oh, it's right here. 69.32 to 35s, right here. You do have a bullish FVG, fair value gap, right here. But you have these, I'd say, equal lows at 69.32s. Okay? You lose that level, you're going to go lower. Okay? Now, up here, okay, overnight highs. All right, there is a supply zone here. So you have supply here. You have a bearish FVG right here as well. Bearish FVG here. So my expectation, okay, is this would make me think we go lower, right? And this can become a swing high. But I don't know, right? Because we're right at this most traded price of the month. So how do we play this, right? So this is our most traded price of the week. Let's just put that here. That's last week's highs, right? But we know we have a bearish FVG right here, supply. It's got a lot of work to do. Now, I just showed you the liquidity rate it just did. My expectation right now would be we just saw manipulation. Like I said, that candle has to close, which it will in about 2 minutes. So let's just get right into it, all right? I don't like being by this most traded price of the month. I don't like it because it's balanced, it's messy, okay? You want to see something off of it, all right? So let's do the longs. Let's do this ES scenarios here, okay? All right. Now, we're at the midpoint of the overnight session. It's very balanced, okay? So what am I going to look for here if I want to go long? Okay. Now you have work to do. You do have work to do. Now the market is pushing back up. That's that swing high. Okay. So for me to go long, all right, I might need to rip up all the way up to here. Take out the overnight highs. Maybe get a pullback. Okay. Back into prior day's lows. And let's say we can bounce off here and hold it. And if it holds and you put some lower highs in, or high lows, I'm sorry, and try to work through this bearish FEG and you work your way back to 69.90. Okay? We hit the psychological level yesterday of 7,000. I thought we were headed to our all-time highs. That didn't happen. Okay? Now, you could get a bear trap as well. So if we fall, remember this level, the 32 to the 35s, there isn't a bullish fair value gap in demand right here. Okay, let's say we take that out, but guess what? The market goes like this. It's a sweep, you get higher lows, well, then you can find yourself back to the mean. This is a messy area, okay? Now, that's longs. Shorts. Right now, I'm a bias to the short side, okay? See what this, if this turns into a swing high, which it already did. This is a swing high now, okay? Let's see what we do. This could be the manipulation link. So if that is the case, and we open up, and let's say we come up to this bearish for value gap and supply, and we come under, you retest the most traded price of the month, you're going to take out that support, you're going to hit the overnight lows. Your overnight lows goes with that 35 to 32s, and then you can see if you can start to push lower. Okay, you do have 6,900 is an end of a demand zone. Okay, remember, we could maybe be starting a new downtrend here. I don't know. That the market's right on the most traded price of the month is a trap. I'm telling you right now, I need to see some structure form around it for me to have confidence to do anything. Okay? So, honestly, there is, now don't get me wrong, if we pushed up, could we fall? Yes, I think that's less quality though. So that's all I'm going to do for the ES short. I think that's really what I want to see. NASDAQ. All right, NASDAQ's a little different because we are not gapping down. Okay, we are holding above the most traded price of the month, 257. Okay, we are holding above the 257 right here. What happens to be the overnight lows line up with that, and they actually did tip their toe into this bullish fair value gap. This yellow box right here actually got buyers, found buyers there. Okay, now it's a little different here. Now we know we have the most traded price of the rolling year down here, this orange box. Remember I said there's just so much trading in this area. It makes it messy. Okay? So, we're back inside yesterday's range right now. All right? The 24-hour most traded price is 25830 right here. Okay, most traded price. Yes, it is right here. You have a lot of bearish value gaps here. Okay? So, my thing you have to pay attention to is the overnight highs. Okay? Also where the close was. You have a bearish for a value gap here and a big one here. If this is a swing high, we'll know in this area. Okay? Now, the most traded price of the rolling year is right around it. Like I said, it goes from 256, 255s. If you break that, that is very bearish. Okay, but you got to get it through the 257s first. Okay, we'll put this high up here. It could be turning into a swing high. Do we go up there today? That would be pretty impressive if it could do that. Now, we're going to split it out. Remember, this is now a swing high and possibly the manipulation of this accumulation for us to go lower. I don't know that. Right now, it's getting love right now. So it could, like I said, if it takes this out, we could go up. You got a lot of work to do though. There's a lot of work. Okay. So let's get into scenarios of the NASDAQ. We're going to start with a bullish scenario. All right, so we know we have a swing high here, right? But above that is our most traded price of the 24 hours. That's not going to be easy to go through. You can see the trading that's happened here, here, and here in the overnight. That is not going to be easy to just slice through. Okay, so what could we do? All right, now number one, I would say to show strength, push above this swing high, the most traded price, and you need to hold the 25830s. Maybe you put a higher low in. Now you're going to try to work through this bearish fair value gap and work your way back to yesterday's highs. That would be bullish, I'm sorry. Okay? Now, can there be a bear trap? Of course there can. Okay? The 257 could be your friend. If we just drop, right? Go right out, take the overnight lows out. Okay? Take those overnight lows out. But then the month to date anchor view up's there. You got a bullish fair value gap here. You got the most traded price of the week in the real-time trading hours. If this catches and goes whoop, holds 257s, higher low, this is going to get messy and we're probably going to go back to here. All right, that's what I'm interested in for longs. All right, now shorts. I am biased short here until we could take out that swing high. I don't like longs in here at all. I don't like it. Okay, so we know we got the most traded price of the 24 hours of the week. All right, the weekly 24-hour is right here. So supplies here, bearish for value gaps are here, the most traded price of yesterday's here. Let's see what we do here. Now, maybe you come up here again, right? Run into it, put a lower high in, a lower low, a lower high, and that rolls. You will take out this 25739 support. Now you're going to go probably tag the overnight lows. Okay, that could be the trade, right? That could be the trade. You sweep this liquidity and maybe you bounce. However, right, you got a lot of trading volume here. That will not be easy, but if it is easy, that is very bearish. It could just rip right through. You have a big demand zone here, 255s. This could get ugly. Really ugly. Really fast. Okay? That's really what I'm liking to see. Okay? Now, I'll give one more here. This swing high here, let's say we do this, but then we wick. Whoop, hit that 25830s and also target 257s and then maybe go lower. All right? That's what I'm liking. Anything up in here. Now, don't get me wrong. Can a short come in here? Possibly. Okay? But you would have broken these swing highs. So that makes it a little, I'm not sure if I want to do that. So that is the scenarios. Okay? Now, let me see if I can show you another chart that shows you the sheer volume. Oh, yeah, I can. Let me show you what I mean about the volume in the NASDAQ. Okay? This is a chart you guys used to see a lot. I don't give you all this time anymore. Right? So this happens to be the most traded price of this year right here. This is that most traded price of the rolling year. Okay? Meaning a year ago from today, this is the most traded price. 25573. Okay? 25573. Look at the volume here. This is where this market has been. Here's my point. Look at all the volume from this year, the green. Look at the volume from the rolling year. It's a big volume fest in here. That's why I'm saying, if you take this out, right? There's a lot of volume in this area, but like that is a big level, and this could really cause some selling. Now, I don't know what's going to happen. Okay? I really don't know. I know one thing. NASDAQ is definitely not close to all-time highs. I could tell you that much. All right? That's what I just wanted to show you. Let me show you ES real quick, and we'll get you out of here. This is ES. The 269.88 is the most traded price of this year. It's not that significant yet because the year is not that old. Okay? The most traded price of the rolling year is here. 68.28s. We're not by that. We're not by that. But we do have a bulk of volume here as well. So that's why I'm saying just icky kind of markets right now. It's not like the greatest. Okay? All right. All right. That's it for me, folks. Smash that like button if you enjoyed that analysis. Hopefully you did. Okay? And as always, hopefully you can join me every morning. I'll give you the market story, the market news, economic calendar, leaders and laggards, followed by a bunch of technical analysis, and then I just gave you the long and short trade scenarios in the Nasdaq and ES futures. Okay? Hopefully you enjoyed that. Now, if you want that more in-depth coverage, you're going to join my Discord, Confluence Trading. Go to the YouTube homepage, click on the link, sign up. What are you waiting for? All right? Let me be your indicator. Remember, I said that I kind of went against my system, but when I speak, I don't go against it when I'm speaking. When I'm out loud, I'm giving the raw deal. I'm telling you, internals are weak. I'm not like telling you, I'm ignoring that. I'll say it. Oh, internals are not that strong. They are not that strong. And anytime, like I said, one of my good friends that's in my community, that I've said, we're up here and we're not strong, usually a turn happens unless the market keeps getting stronger. But if it stays the same, there's going to be a sell-off. That's what happened yesterday. Okay? That's what happened yesterday. So hopefully I see you in my room. Okay? Ask me questions. So, all right, everybody. Hope everybody has a good day. I'm going to reset my day. Remember, I made real money, but still, I don't like what I did yesterday. So today is a reset day. You start fresh. I want to follow my process. I want to listen to my internals. All right, so come join me. I hope everybody has a great day. All right, remember, no trade's a trade. Take it easy.